When we fly, when we drive home, when we turn on the light, and when we try and keep warm, we're using one of the most sought-after commodities in the world, that is crude oil. Hi, I'm James, and I'd like you to join me as we discover trading. Today, we're looking at crude oil, a commodity we all use in our day-to-day lives and is often a headliner in the news. In particular, we will focus on WTI oil with the hope that by the end of this video, you'll know what to look for if you're looking to become an oil trader. First thing first, where does oil come from? Crude oil is a so-called fossil fuel, which most scientists believe to be transformed from remains of plants, tiny marine organisms, and larger animals like the dinosaurs, which mixes with mud and sand and ferments over millions of years and becomes the very substance that drives our world. WTI, which stands for West Texas Intermediate, is a grade of crude oil which is described as light and sweet and is a physical commodity. It tends to be newsworthy because it's used as a benchmark for oil prices. Crude oil can present a lot of potential trading opportunities due to its high liquidity and its unique position in today's global economic and political arena. So what are some of the key areas you need to be aware of when you're looking to trade this commodity? First and foremost, supply and demand. As long as demand is exceeding supply, the value of oil tends to do well. When supply exceeds demand, we tend to see the opposite effect. For example, in the summer 2008, WTI started its run towards $150 a barrel due to a fall in supply and high demand. When the global economy crashed into recession, demand dropped while supply remained consistent. In less than a year, prices had fallen by more than 50%. How can you monitor supply? Well, nothing is ever certain, but one way to keep an eye on supply is through the EIA crude oil stockpiles, which is released once a week and shows the number of barrels in stock. Details of this can be found on the financial calendar. Another major area to watch out for is OPEC and its meetings. OPEC is the Organization of Petroleum Exporting Countries and is an intergovernmental organization of 13 oil-producing nations, including the likes of Saudi Arabia and Kuwait. This organization accounts for an estimated 42% of global oil production, so its decisions on its supply levels tends to have a major influence on global oil prices. It is also a good idea to be mindful of potential conflict or political unrest occurring in oil-producing nations, as this can have an impact on supply. When it comes to potential future demand, you can monitor certain economic indicators, which includes the following. Global GDP. Higher growth can create more demand. Industrial production and manufacturing production. A growth in industry could result in more demand for oil. Market sentiment. This is another strong indicator. As we all know, with all kinds of trading, knowing whether the market is bullish or bearish can be an indication of potential effect it could have on WTI. Our very own Inside Viewer can be used to help with sentiment. So, in final analysis, these are the areas you need to be aware of when you're looking to trade WTI oil. Supply and demand. US EIA crude oil stockpiles. OPEC decisions on supply, potential conflict or political unrest in oil-producing countries, global GDP and industrial production growth, and market sentiment. Join me next time when we start to look at the psychology of trading. Till then, thanks for watching, and you trade safe.